Advanced MNSR strategy. So this is the easiest way to get your MNSR strategy. We call it Malaysian support and resistance. Call it Malaysian support and resistance strategy. Malaysian support and resistance strategy. So this is the best way to go about Malaysian support and resistance strategy. The Malaysian support and resistance strategy is a strategy used to identify the support and resistance in a moving trade. You'll be able to identify where the market is what is reacting from, a point where the market has a tendency to react and respect the directions, or a point or a zone where the market is likely to reverse from, or a point where the market is likely to continue its direction. So we are going to see that we are going to mark just one point, and we are going to find out that we have different markets respecting or reacting on that zone. So for example, we have a particular zone, moving zone this way. For example, we have a zone moving this way. This particular edge is a turning point. This is a turning point of the market. This is also a turning point of the market, where the market is reversing. This is a turning point of the market. This is also the turning point of the market. So all these are what we call the support and resistance. Look at this page. This is support of an uptrend market. This is a resistance of what? Of an uptrend. This is the support of an uptrend. This is the resistance of an uptrend. This is the support of an uptrend. So for the downtrend market, we have this as our support and resistance. This is our turning point. Every turning point is either a support or resistance. These are called a turning point of the market. These are called the turning point of the market. You can see we have our support and resistance in our downtrend market. Now this is our support, this is our resistance, this is our support, this is our resistance, this is our support and resistance in a downtrend market. Now how do we get our turning point? Our turning point is a sharp edge in the market. The sharp edge in the market be the support of resistance. So here is the advanced. We are going to talk about the advanced way to identify our support and resistance, which we call the Malaysian support and resistance. In the last class, we talked about the trend line, which is our what? Our vertical support and resistance. We talked about that in the last video. You can watch the last video before this so that you'll be able to recap where we talk about the support and resistance of a trend line. We talk about that. You can check the last video. You can also subscribe so that you are going to be what? Follow up all those videos. You can subscribe to the YouTube channel and follow up. You can see this is a vertical support and resistance. This is not a Malaysian support or resistance. So we want to talk about the support and resistance of Malaysian. That's Malaysian support and resistance. So we are going to talk about how we are going to move on that. So this is the trend line is a vertical support and resistance. So for the Malaysian support and resistance is always in an horizontal line. See something like this as support and resistance. So How do we go about this Malaysian support and resistance? The advanced way and the most easiest way to go about as support and resistance. Every turning point you are going to mark your what? Your your line. Every turning point you mark your line there. You can see where I'm marking my line. Every turning point I'm marking my line there. Every turning point I'm marking my line there. Every turning point I'm marking my line. Is that clear? You can see the way I mark all my line on what? On those reversal level. We can call it a reversal level, or we can also call it a turning point. A turning point. Now let's look at this. Our turning point is here. We have one turning point here. We have one reversal here. We have one here. You can see this is our what? Our Malaysian support and resistance. Now let's quickly go to the boundary chart so we can identify the support and resistance on our wrist chart. So every single support and resistance, you look for a potential reversal or a potential continuation of the market. You can see this is our turning point of the market. This is our turning point of the market, and you can see this is also our reversal of the market. This side, you can see this is our reversal or a turning point of the market. This is also a turning point of the market. All these are what? Here is another turning point. We have another turning point here. So since we have another turning point here, they will mark this side in this way. Is that clear? So now let's go to the previous or this the previous market, the history of the market, the market history, you'll find out that there is a point where the market is reacting from. Every market is going to react on support and resistance. Now look at this one that we draw this way. We draw this support and resistance here. You can see it reacted from this place. Reacted from this place. When it comes to this side, you can see the market rejected from this. The market reacts from this piece and it got affected in this new one. When we draw this line, you find out that it reacts from the previous zone of the market. Now, if you check at this point, the market reversed. The market rejects from this point, and what we can see a rejection zone. And what do? We buy from this edge. We buy from this point. We buy from this point. You can see the way we buy. You can go to a lower time frame in order for you to get a higher ratio to reward. The ratio to risk reward. That's RR, risk to reward ratio. So you can see that when we get to this side, the market break this zone. The market break this. After the market has respected this zone, the market rejected from this up here as well. The market rejected from this zone. You can see a rejected zone from this point. Then we sell from this edge to the next support or the next resistance level. You can see support and resistance level. So we find out that there is an history. We find out that we have history of what? Of reaction. You can see this same support and resistance reacted from this place. You can see rejected from this place, then we sell to this point. Now from this point, you can select you into the line chart so that you'll be able to see it very well. You can see where the market is what is rejected from. The market is rejected from all these previous history of the market. You can see the market is reversing from those points. Our MNSR support and resistance level, the market keep rejecting from those two. You can see market touch many zone on that same support and resistance zone. So MNS are an advanced way just to find a turning point, the recent market turning point, then you draw your what? Your horizontal line. You can see. So let's really go to a lower time frame so that we can add another support and resistance level. So let's go to 1 hour time frame, 3 hours time frame for example. Then go to 2 hours time frame, 2 hours time frame. You can see the 2 hours time frame. We can also take our support and resistance from this zone. So you can see our rejection line, our rejection zone. You can see our turning point. We have a turning point here. We want to trade the previous market structure. You can see we have our turning point in this space. And what happens to this side? When we got to this side, the market was reacted from this line and what comes down to what to sell to the next candlesticks, to the next support level or the next resistance, the support level of our reversal. So we have our 1:3 on this scenario. So let's really go to the next pair so that we can also experiment those trades. You can start from daily time frame, move to 1 hour time frame, move to 4 hours time frame, move to 1 hour time frame. Then you can start trading your MNSR support and resistance level. Now let's quickly start from the daily time frame. Our daily time frame, you can see this is our what? Our reversal point. This is our turning point. This is our turning point. We mark our what? Our turning point. We are going to mark it at the body of the candlestick, not on this wick. You mark it at the body of this of candlestick. That when you switch to line chart, it's tally with what? With it, and not the manipulation wick. So we have it this way, and this is our turning point. We have our turning point here as well. We have our turning point here. This side. We have our turning point here. This is our turning point. This is our turning point. We have a turning point here. We have our turning point here. You can see we have our turning point here as well, where the market is what is reversing from. And now let's go to the previous market history. We'll find out that the market is reacting from this place, from this edge. The market reacted from this edge on this same zone. The market reacted from this edge on our support. You can see the market reacted and what affect this new trade and so it trigger it up. So we have our rejection zone in this place where you can trade up. We also have our rejection zone in different areas on our support and resistance. Now this is a candlestick pattern where we have what we call a bearish engulfing pattern. This is a bearish engulfing pattern where you sell your market down to the what the next resistance or the next support. So you can move to lower time frame of the maybe 1 hour time frame to what to confirm your confirmation. So you take your confirmation signal. Now look at this switch to the next time frame. You'll find out that this uh, market is what is protected for this. So you can make use of your higher time frame, then you switch to your lower time frame and take the trade. And you can see the market rejected, then we sell to this what? To the next zone. We sell to this next zone of our demand, of our supply, support and resistance level. You can see the market also rejected when it comes to this side in our 4 hours time frame. then we sell to this other zone. Yeah, we sell to this zone. Yeah, you can see the market also rejected from this place as well. When the market rejected from this zone, then we can also sell our market to the next support or the next resistance level. So the market rejected from this zone, then we what? We sell, we buy to what? To our next support level. You can see it's as very simple as that. So this is our Malaysian support and resistance level, which is a very strong strategy. You can see this place. We have what we call a chart pattern. Sorry, a candlestick pattern. This is what a ramming pattern has inside bearish candle. So we sell to this next zone. We find out that there is a turning point in this way. Sell to this next zone. Then we have our 7 rates to reward ratio. Now let's look at other examples of this Malaysian support and resistance. The higher the time frame, the stronger your what? Your strategy. Now look at this rejection zone in this way. We have a rejection zone there. And what we buy to this what? To this level. Buy to this level here. You can also find out that there is what? A candlestick closure on this, no rejection on this particular zone. Then when we confirm that there is no rejection from this next zone, then we buy to this next zone. Yeah. So now this particular scenario in 4 hours time frame, we can also mark our support and resistance level here in this way. You can see it's a new turning point of what in 4 hours time frame. So when it comes to this side, we find out that when the market gets to this side, the market keep rejecting once, not twice. The market rejected, and after finding out that the market rejected, then we sell to this what? To this next zone. We sell to the next zone of our market. So I'm very sure this is very, very clear of trading the MNSR support and resistance. So we have our 4 hours time frame, we have our turning point here in our 4 hours time. If you remember, we started from daily time frame. So we mark daily time frame, we trade daily time frame, then move to 4 hours time frame and mark the next zone. You can see this turning point here, and the market rejected multiple times in this particular zone. So after the market rejected, we confirm the rejected zone. We trade to this what? To this opposite, to the direction of what? Of the rejected candle. We trade to the next zone. Yeah, because we have our 5.4 risks to reward ratio. And you can also confirm that there is also what? The rejection zone in this same support and resistance. Then we trade to this next zone, this next support and what? Resistance. So we have our 10, our 11 rates to reward ratio. And you also find out that there is also a rejection zone in this way, in this particular support level. Then we are resistance level, support in downtrend. So then we trade to this what? To this next zone of what? 1:7. So that is the best way to trade our support and resistance Malaysian level. Now you can subscribe so that you are going to follow up with what? With the part 2 of this Malaysian support and resistance.